All right, Evan, welcome back for another episode of Carnivore Trades. Today is Thursday, November 4th, 2021. Markets led higher today by the triple Qs, specifically Nvidia and Tesla. As you can see here on the screen, Nvidia has basically become the SMH today and over the last couple of days, but a couple of big sell blocks going off here around the 3 o'clock time frame. Probably just some hedging, profit taking. We do have the non-farm payroll number tomorrow, so that is something the market is going to pay attention to. But overall, I expect some type of a Friday effect, meaning a light volume float into the weekend. I do think we run into a little bit of turbulence perhaps next week. So let's take a look here at the triple Qs. We are getting into that extended zone. I mean, look how extended we are on the Qs. It's just basically been green, 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 all the way up since the beginning of October. And we're into that upper trend line there. That stretches back to basically a year ago. And I showed this to the patrons last week. But if we take a look on the weekly, and I'm not a big MACD guy, but you know, sometimes I do take a look at it. Every time we get up to this upper trend line on the MACD, it coincides with this blue line here. So we are potentially getting a little extended here on the triple Qs. Probably make this a little more accurate there. Probably a little bit lower. But in any case, so triple Q is getting a little extended in the near term and just really overbought. Nvidia got upgraded a bunch of times today. So I guess that makes it 14% more valuable than yesterday. So congrats to the bulls there. Now, the question I keep getting here, not from you guys so much, but I keep seeing it all over Twitter. Why is gold higher with the dollar index? Well, I mean, if you've been watching this channel for the last 6 months, you know that I've been talking about the possibility of that happening. And it has happened before, and it will happen again. Essentially, what is happening is you're seeing a little bit of cracks in the armor. You're seeing a little bit of a risk-off type of trade coming on here. So dollar index up, gold up, bonds up, and VIX gapping down, but coming back to the positive side, up almost 5% now. Meanwhile, you know, the equity markets are, oh, everything's fine. So one of these things, we can see the VXX on my screen gap down and rallying back up. So one of those indicators is lying. And I think it's the equity markets. So as we get closer to OPEX week, which is 2 weeks away, you know, I think we got to be a little bit more guarded for some type of a pullback here in this market. I don't know if this is going to be a major pullback, but, you know, I'd expect the Qs probably at least to return to this midline here. On the NASDAQ 100 there. And then, you know, for the spiders, you probably look at least maybe to the 50 or 20 moving average, somewhere in this range, you know, would at least be a logical area for a pullback on the spiders there. But speaking of yields here, so yields pulled back a little bit today. That is putting pressure on crude oil, obviously. If you look at an intraday chart here of crude oil, just take a look here as we zoom in. Just look at the movement there. And then look at the yield. It's basically the same chart. So yields obviously dictating crude, you know, as to be expected, but just interesting correlation there. We did hit the 85 handle. I told you guys that was going to be resistance. We got up there, printed all the way up to 85.41 and then pulling right back. And yesterday I talked about downside targets. So it'd probably be around, you know, the 77, 76 handle. You got the 50 MA there, previous all-time, or not all-time high, but 52-week high, I suppose. And then on the weekly time frame, you got that 20 MA upsloping, coinciding with that. So again, that 85 handle, I knew it was going to be, I knew we were going to stall out there. I didn't know we were going to really pull back that much. Obviously, $90 is the major area. We've been talking about that for, you know, quite some time now. But yeah, crude coming in a little bit here. Let's take a look at the XLE. So XLE pulling back as well. Now, a big story of the day here, or at least in my book here, the XLF's getting hit a little bit. Down almost 2%. JP Morgan taking a hit, down 2%. Goldman losing the 20 moving average. Morgan Stanley all the way down to the 100 moving average. Bank of America, Wells Fargo. So financials getting hit a little bit, obviously with the higher yield, that's to be expected, but they're taking quite a hit here. So that is something to monitor moving forward. KRE looked to be on breakout yesterday, now having a red day. Same thing with the KBE. A pretty big reversal here. Now, it hasn't taken out yesterday's low, so you still have an inside day. But, you know, these are pretty big reversals, and if they continue lower, you know, that's something we're going to want to watch here moving forward. Home builders, they were having a nice day as well, although coming, in off the highs again. Russell 2000, that was supposed to be on breakout. That's pausing a little bit here. Again, it's one day. It doesn't make a trend yet, but it's something to pay attention to for sure. Now we do have, let's see, we do have some earnings. So we've got Peloton after the close. Let me just double check here. Yeah, Peloton, Uber, Pinterest, Square. So let's see here. Square, yeah, Uber. And so these all report after the close. So we'll be watching those. Activision did get a bounce after that bloodbath yesterday. Let's see, Roku reported that got hit a little bit here. That's probably going down to the 260 handle. I have some support here. Yeah, right in that probably down to 250, honestly, if it can't hold this low pivot here. So we do have earnings season going on right now. I want to talk a little bit more about gold as well. So we've been watching this, and we've been watching the GDX. Now GDX gapped up, rallied to the 100, now pulled back. Same thing with the GDXJ and the SILJ here. So miners coming back in a little bit, diverging from spot price. As spot silver was up nicely as well, but I still like the patterns here. Now we have a lot of earnings reporting. Barrick reported this morning. Sandstorm reported. Market liking Sandstorm there. That was a nice little pullback candle there. And Wheat and Precious Metals reports next week. So there is some earnings coming out. So we're going to get a bit of a mixed bag. But I think these miners could potentially be a nice trade here if gold can hold up. And again, we talked about the major resistance area on gold. And we've basically just been chopping the last couple of weeks. But we're looking at that 1811 area. If we can take that out by Friday's close, gold can go a lot higher. Probably up to the 1870, 1860, 1870 area. So we're going to be keeping that on watch. Tomorrow's close will be very important for gold. In any case, I think that's about it. Oh, one more thing I wanted to point out. Broker dealers, XBD, so this had an engulfing reversal today. There's still about a half an hour left in the trading day, so it could recover, but this is generally a good leading indicator that you want to look for. And again, with the market up as much as it is, we're not seeing strength from broker dealers. We're not seeing strength in banks, and transport's actually coming back in a little bit as well. Normally I use the DJT, but it is so skewed from the Avis debacle yesterday. The IYT is a little bit easier to see. You can take a look in the intraday. Transport's chopping a little bit. Again, we're just seeing a few cracks in the armor. That doesn't mean go full, naked short here, but we probably will see some type of a sharp pullback, probably as we get closer to OPEX week, which will be, I believe, the 19th of November is the actual expiration. So sometime next week, I'd expect some type of a pullback. But in any case, I digress a little bit here. You guys take care. Thanks for watching, and I will talk to you tomorrow.